Hey everybody, welcome back to the channel. Generational Wealth here. And wow, things around Kaspa are getting hotter than a mining rig running in August. The entire crypto community seems to be buzzing with one massive question that refuses to fade away. Can Kaspa actually reach $1 this year? Yeah, you heard that right. That would mean more than a 12x gain from where it's currently trading. Sounds wild, right? The kind of number that makes you double-check your calculator or your sanity. But according to the ever-enthusiastic Renz from RenzMaxR, that target is still alive and kicking. Not only that, he's gone even bolder, suggesting that Kaspa could someday evolve into a $1 trillion network. Let that sink in. We're talking about a valuation that puts it shoulder to shoulder with global tech giants, the same kind of companies shaping the modern economy. Now, I know what you're probably thinking. Did Renz accidentally multiply by 1,000? But his confidence in Kaspa's future isn't random hype. There's a real foundation behind it. So in today's video, we're going to break down exactly what's fueling this optimism. The price action, the technology, the market behavior, and whether this $1 dream is just fantasy or a glimpse of a possible future. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with the basics. Kaspa right now is sitting around 8 cents, according to data from Kaspa Daily. The short-term resistance is hovering near 8.8 cents, while strong liquidity support seems to be holding between 7.4 cents and 7.2 cents. So what we're looking at here is a tight range, the kind of setup that usually ends with a big breakout. Now, cue the comic relief of the day. Kas Media recently posted on X calling Kaspa's chart a super rare Godzilla formation that only appears once every 100 years. Dramatic? Absolutely. But they immediately followed up with the joke that maybe it's more like a turtle, one that might crawl into the top 3 market caps if it survives the next century. Classic crypto humor. But buried under the jokes lies an important truth. The turtle analogy hits home. Progress, even in the most advanced blockchain projects, takes time to reflect in price. Kaspa isn't some meme token on a rocket ride. It's an infrastructure layer being built brick by brick. Still, once it moves, it tends to move fast. Kaspa Daily recently highlighted something really interesting. A price surge toward 9 cents could trigger liquidations of roughly $35 million in short positions. You know what that means. A massive short squeeze could ignite, flipping the narrative overnight. Picture that turtle turning into a cheetah. It's those unexpected squeezes that rewrite charts and create the "I wish I had bought more" moments we've all lived through in crypto. Speaking of those moments, Mitchell Lim put it perfectly when he said that seeing Kaspa below 10 cents is a blessing for the patient investor. In his view, this is the kind of undervaluation window that doesn't stay open for long. And honestly, he has a point. Every major crypto success story, Bitcoin, Ethereum, Solana, all have that one price level people look back on and say, "Man, I should have loaded up more." For Kaspa, that number right now might just be 10 cents. Another key angle comes from Honorius, known in the community as Orangutan Elder, who explained why we're seeing this consolidation. According to him, a massive 93% of Kaspa's total supply has already been emitted over the past few years. That's huge. It means early miners and adopters have been gradually taking profits, a totally normal and even healthy phase for any proof-of-work project. He describes this not as weakness, but as a de-risking stage, where the market resets before the next growth cycle. And then he drops a jaw-dropping comparison. If Kaspa manages to reach around 37 cents by October 2026, which would put it near a $10 billion market cap, it would actually be outpacing Bitcoin's early growth curve. Think about that. Kaspa has already surpassed the $1 billion and $5 billion milestones faster than Bitcoin did back in its early years. Honorius even goes as far as predicting that Kaspa could outperform Bitcoin's stock-to-flow model by 2028 or 2029. That's not a small claim. It's a statement of how quickly this network is maturing. This comparison to Bitcoin is more than just clickbait. Bitcoin was the creation of a category. It invented proof of work. Kaspa, on the other hand, represents the optimization of that category. It's built on the same principles, but re-engineered to remove inefficiencies. That's a massive deal. The market doesn't need to rediscover proof of work anymore. It already knows the value. What it's doing now is learning that Kaspa can do everything Bitcoin does, but thousands of times faster. That time compression makes the adoption curve steeper and faster. In other words, what took Bitcoin a decade to achieve, Kaspa could compress into just a few years. So let me ask, are you one of the early believers holding strong, or are you just discovering Kaspa now? Either way, the timing couldn't be more interesting. Let's put price predictions aside for a minute and talk about what actually makes Kaspa stand out: its technology. Kaspa isn't just another proof-of-work coin. It's built on something revolutionary called BlockDAG, which stands for Block Directed Acyclic Graph. Without getting overly technical, this means that unlike Bitcoin, which can only add one block at a time, Kaspa's architecture allows multiple blocks to be processed simultaneously. This completely changes the game. Instead of waiting for one miner to finish before the next starts, the network can validate many blocks at once, massively increasing throughput while maintaining the decentralization and security proof of work is known for. How fast, you ask? Numbers don't lie. Kaspa handles over 5,500 transactions per second with sub-second confirmation times. Compare that to Bitcoin's 7 transactions per second, or Litecoin's 56, or Dogecoin's 30. Even in the world of proof of work, Kaspa is in a league of its own. And here's the kicker. It does all this without layer 2s or complicated sidechains. It's pure on-chain scalability. Recently, Scape Squad reported that Kaspa now has nodes running in South America and South Africa. This might sound small, but decentralization is about global participation. Every new region strengthens the network. A presence in these continents means the protocol's infrastructure is quietly spreading everywhere, creating the foundation for unstoppable adoption. Speed and decentralization together are what have always driven technology revolutions. The faster the internet got, the faster innovation happened. The same rule applies here. The faster the blockchain, the faster real-world use cases can emerge. And Kaspa is setting the pace without relying on centralized shortcuts. Imagine instant payments, microtransactions in gaming, or high-frequency decentralized trading that actually works at real-world speed. That's not a fantasy. It's the natural outcome of Kaspa's architecture. Now let's get to the million. Or should I say trillion-dollar question. If Kaspa's fundamentals are so strong, what kind of wealth generation potential are we really looking at? Generational wealth, the community itself, raised a great discussion point. Are you holding for $1, $5, or something beyond? Because when you consider global trends, especially the $72 trillion wealth transfer expected in the coming decades, even capturing 1% of that through blockchain infrastructure could be absolutely transformative. Now, let's stay grounded. 1% of that massive figure is ambitious, but it's also a powerful way to visualize potential. If you believe decentralized systems will become the backbone of global finance, then the network that's fastest, most secure, and most efficient has a serious claim to that future pie. At just 8 cents, Kaspa's valuation barely scratches the surface of what its tech could represent in the long run. It's like trying to value a Formula One car by the price of its tires. It doesn't make sense. Here's the real secret. Kaspa's market hasn't yet priced in the full value of BlockDAG technology. The price still reacts to short-term traders, early miner profit-taking, and liquidity cycles. But the underlying engine is unmatched in the proof-of-work ecosystem. This asymmetry, the gap between Kaspa's technological strength and its current market cap, is where the real opportunity lies. Think of it as the calm before the next storm. A period where the fundamentals are already solid, but the recognition hasn't caught up. And here's the part that should make every long-term investor's ears perk up. This kind of asymmetry doesn't last forever. Once the market wakes up, it often overcorrects, quickly and dramatically. We've explored the ambitious $1 goal, laughed our way through the Godzilla versus Turtle chart, broken down the short squeeze potential, and unpacked the raw technological power behind BlockDAG. The story of Kaspa is still being written, but one thing's clear. The blend of speed, decentralization, and proof-of-work security gives it a serious edge. Whether the climb happens this year, next year, or 5 years from now, the engine underneath is roaring to go. Right now, we're in that rare window of opportunity that only looks obvious in hindsight. So, what do you think? Will Kaspa crawl like a turtle, sprint like a cheetah, or roar like Godzilla into the next bull market? Until next time, this is Generational Wealth signing off. Stay curious, stay strategic, and keep your eyes on the long game. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.